Hello, chart watchers, and welcome to this Friday, February 23rd Market Watchers Live show with your hosts, Tom Bowley and Aaron Swinlin. For those of you joining us for the first time today, welcome to the show. And for our regulars, welcome back. Let's take a quick look at the market, make sure we got the latest numbers here. We got the Dow Jones Industrial Average up 189 points near the high of the day. Once again, challenging this resistance area that we've seen for the past week or so. Right at about 25,250. That's been a really tough area to close above. We're currently at 25,150. It'd be interesting to watch this into the close today. S&P 500 also in this flag formation, trying to make a break above recent highs, unable to do so recently. The NASDAQ actually would be closing at a new high if we can hold this into today's close, while the Russell 2000 perhaps lags the other indices by a bit. But also trades around its moving averages. 10-year Treasury yield down today about 4 basis points, taking us back below the 290 level. Volatility index, this is really big, dropping another 9% today, back close to 17, watching that 16, 17 support area very closely. Utilities having a big day today. Of course, they are aided by the 10-year Treasury yield dropping, so that is a good thing in the short term. Talked about a positive divergence on utilities. I think the 51 level, 51 and a quarter, is going to be an area of resistance there. The XLP not performing quite so well today. Consumer stocks in general lagging the overall market. Among companies that have reported their earnings, GoDaddy, this is the good, the bad, and the ugly. Here we've got the good. GoDaddy gapping up, beating top and bottom line, continuing to move higher throughout the session so far. HPQ came out with a great report, gapped up, but you can see actually trading near the low of its day so far. Huntsman gapped up and no longer is even in the positive. It actually is down a penny right now, was down a little bit more maybe about 15 minutes ago. But Huntsman reported strong results, gapped up, came all the way back down, filled the gap, now trying to turn back up again. And then the ugly, Acacia, ACIA, stock is down almost 16% on its earnings, challenging the end of January support. And with that, let me bring in my co-host, Aaron. How are you doing this morning, Aaron? Just make sure you are unmuted.
Yeah, I am. I'm doing well. I have to wake up a little, that's all.
Just get another cup of coffee. No problem.
I'll try. No, It's a good day. Beautiful sunshine, blue skies as I look out my window.
Yeah, what are you going to do for excitement this weekend? I mean, last weekend you followed the Ducks to Las Vegas, had this big Vegas weekend. And
I know. Well, there, of course, are Ducks games this weekend. Actually, I think we have back-to-back Saturday and Sunday. So my weekend's complete. I don't need any more plans. So.
Now, are you season ticket holder? Do you go to all the games?
Absolutely.
Boom.
I am getting ready to renew them. So, yeah, we're really weird hockey people. And what's crazy and weird is that we only started really following this intensely in the last like 2 to 3 years. So
yeah, I know you're really only interested in beating the Calgary Flames, so you can,
Oh yes,
Greg Schnell. I know.
Yes, and they lost to the Kings, or not the Kings, the Knights, the Golden Knights. So they're falling further, and that makes our position in third place a little more comfortable.
All right. Well, just don't put any kind of hex on my Capitals, please. They have enough problems when it comes.
You're in the Eastern Conference. I'm not going to worry about you until playoffs.
Well, you don't have to worry until the finals, and of course we won't be there, so you don't really have to worry at all. But anyhow, got a stacked lineup, I guess, today. So why don't we go through the announcements and agenda and get everything going?
Absolutely. All right. So as far as our weekly schedule, we have everything stock charts coming up next week. I'm not sure what we're going to talk about, but I'm sure it'll be interesting. And then Mark Chaikin, you might know his name from the Chaikin Money Flow. He's going to be joining us on the program on Wednesday, and that should be a fabulous program. And then we're going to also see the very next day, Bruce Frazier. I know you guys will be happy to see Mr. Wyckoff again. So he will be here on Thursday of next week. So write it down and don't miss him. As far as today, Tom's getting ready to do his island reversal workshop. And we're going to follow that up with, we did Tom's mailbag, so we'll do Aaron's mailbag this Friday. I've got a bunch of questions I'm going to try and answer. And we'll follow that up, of course, with the 10 and 10 to 1. And our first one is going to be Cracker Barrel, CBRL. I really miss Cracker Barrel in California. We don't really have any sentiment update. I will let you know what the sentiment charts are telling us, and it is very interesting today.
All right. Well, let's jump into this. Let's get this party started.
Yeah.
It is Friday, so happy Friday to everybody. Well, let's start off first with the 10-year Treasury yield. That's where I like to start. 2.87 right now on the yield, so we are back down below the 290 area. And I've been a little concerned about the Treasury yield. Talked about this recently, but as we've been moving up, you can see the PPO kept going up with it. But in recent days, as we've moved up above 290, we're getting closer and closer to that 3% threshold. You can see the PPO actually rolling over here. So I'm not surprised by this weakness. We haven't even had a 20-day test in 2018 yet. We got close at the beginning of January, didn't quite test it. So it's been since the end of last year that we've even had a 20-day test on the 10-year Treasury yield. So it's been a straight up move there. But we are pulling back. I think we'll at least get a 20-day test, if not break below it. And my gut feeling is that we'll consolidate. We'll just do a little consolidation for a period of time, maybe between this 20-day and 3% in that level. And we'll see if maybe the 50-day comes up from underneath to test it at some point. But anyway, there's a lot going on there. We do have several Fed presidents out talking today. There was no economic reports, so I don't really have anything to share with you there. But there is a lot of Fed speak today. So the 10-year Treasury yield in the bond market will be in play, no doubt, as we hear from a number of the Fed members. A couple of individual stocks. Let's talk about some stocks here. First, I mentioned ACIA earlier. This is a company that reported their earnings. They missed on their revenues, and they did beat on the bottom line, but they came up about $2.5 million short on the top line. It's a fairly small company. They had 86.6 million in revenues. The market was looking for 89 million. And then on the bottom line, they did beat the 25-cent estimate. They came in at 27 cents. You can see what the market thinks of their report with this huge drop to the downside. I'm going to pull up the relative chart that I like to show, because I think this kind of bears out some of the things that we talk about. We've had a number of guests in here, and just about every one of them has mentioned in some way, shape, or form relative strength. It doesn't matter whether it's the stock charts folks that we've had in, Greg Schnell and Arthur and Julius, or if it's been some of our special guests from outside stock charts that have joined us. It seems like that's been a common theme. We're always looking for relative strength. So when you look at at ACIA, number one, it's been in a downtrend for a while. If you go down here to the telecommunications index, you can see it actually it's in a group that has been rising. So this is the absolute performance of its industry group. And yet ACIA has been moving down. And so when you compare ACIA to its peers, obviously you're going to get a downtrend. So we have a relative downtrend. We have a stock that's in a group that's been strong, but the stock itself has not been strong. And so you can see ACIA relative to the S&P 500 here declining. And this is the group relative to the S&P. So this has been a really good group. And I think what all of this tells us, or should be telling us, is that you really want to get involved in companies that are outperforming, that are relative outperformers. If you're in a company, you're in an individual stock that has not been performing well within a group that has been performing well, chances are this is the kind of results you're going to get. ACIA, again, missing on their top line, beating on the bottom line. The market doesn't care, but perhaps we're getting a double bottom. So from a reward to risk standpoint, after this gap down, it is at support. We did break below intraday, and so far we've held that level. So I could certainly make an argument from a reward to risk standpoint to be long the stock, but it wouldn't be one that I'd hold for very long, because again, it's not a stock that has been outperforming, and I want to try to outperform the S&P 500. So ACIA I thought was interesting to talk about. A couple of others individually. Actually, let's stick with this relative chart and analysis. All right, we've got Huntsman Corp. They came out with their revenue, or with their earnings report. Revenues were $2.2 billion. Market was only expecting $2.1 billion. And bottom line, market looking for 66 cents, and HUN posted 76 cents. So a really nice beat. We had a good gap up to start, but we have pulled back. Now, if we look at the commodity chemicals index here, you can see overall, I think it's been a pretty good index, although the past 3 or 4 weeks have certainly taken a toll on the group. Huntsman has been one of the best performers. So we just looked at ACIA, which was one of the worst performers in the group. Here you've got a company that actually is among the better performers, posts a good number, and then gaps higher, at least early in the action today. Huntsman relative to the S&P 500, I think continues to be in an uptrend, even though 2018 we have seen a little bit of relative weakness. And then the industry group relative to the S&P, I think actually has been downtrending now for about the last 4 months. So you've got a company that is in a downtrending industry group, but it is among the better performers. And so when you look at the chart, you got a nice uptrend in play. You got the gap up. I still think resistance is up closer to 36. Today, the move back down, filling the gap and going below and now starting to rally back up, I actually think this is somewhat bullish. We'll see whether or not we can continue to strengthen into the close today. That would be bullish, though, if we could make a move back up toward those earlier highs this morning. So that was HUN. HPQ, Hewlett Packard. Hewlett, or HP Inc., I guess, is their name now. HPQ, big gap up. This was one that right now has got a shooting star candle. Nice gap up, or excuse me, a nice move up, and then the gap up. But it is trading near the low of the day, leaving this long tail to the upside. I don't like this candle if it finishes like this today. I think we're in a trading range now, pretty wide trading range on HPQ, the recent high up above 24, and then this low just below 20. And we're sitting right now 22.53, so it's kind of in the middle of the range. But it is noteworthy that they did beat top line and bottom line. Their top line came in at $3.51 billion, market looking for $3.32 billion, and the bottom line 48 cents versus 42 cents. So really good earnings report out of HP. And so far, got a nice gap up. But again, the action since the open, not so great. We'll see how this one finishes later today. Another company, this one was having not so great a day. Royal Bank of Canada, RY. And if you notice, a lot of the banks recently are up near their highs. Royal Bank of Canada is not one of them, though. You can see we got up over 86, pulled back with all the selling, down about 10% off those highs, and really in a bear flag, not really moving back up above any key levels here. We've got reaction high coming in just at above that 81 level. You got the 20-day moving average, which has been a struggle. That sits at 81.12. So the company needs, the bank needs to get have a nice finish and maybe close back up over 81.5 to get things going. But Royal Bank of Canada did come in much better than expected with both its revenues and earnings. Revenues came in $8.56 billion. The market looking for $7.68 billion. So more than a 10% beat there, and another 10% beat on the bottom line, 172 versus 157. But, and this is a big but, you've got the reaction highs here we can't get through. I don't like to ask those why questions. Why is Royal Bank of Canada not going higher? They just beat top line, beat bottom line. They're in a good industry group. What's the matter? Why are they going down? I don't know the answer to that. All I know is technically we got issues here. This has not been one of the better performers. On a relative basis, we can pull up that relative chart. You can see overall, here's that bank index, been moving, straight up for the most part. A little bit of pullbacks here and there. But on a relative basis, is this one of the banks you want to own in the bank space? I would say no. We just recently hit a multi-month relative low on this particular bank. So no, this is not an area I'd want to be in. RY relative to the S&P 500, you can see it's quite a bit off its high on a relative basis. And then you've got the banks, which have been outperforming the S&P 500. So again, you take all of this into account, and we do have to be careful when we get companies that are in solid industry groups and they underperform both their peers and the benchmark S&P 500. And with that, I am going to turn it over to Aaron. We do have a few upgrades and downgrades, so I'll let you take it away, Aaron.
All righty, let's get to it. Looks like you showed ACIA pretty well, so I'll look at it briefly.
Well, go ahead, yeah, because I think that was one of the downgrades. So definitely see what the PMO is saying.
Yeah, so here we go, downgrades and upgrades that I'm going to just cover real quickly today. So let's start with ACIA, like we said. The PMO is pretty darn ugly here, and that's what I noted right away. And of course, the scooter just dropped a great deal, but not a surprise when you see a gap this large. I know the temptation would be, of course, that maybe we're on some important support here, but if you look at the weekly chart, there's plenty of room. There is plenty of room for decline here. I can see a broadening pattern. I don't really talk about those much, but that is a bearish pattern typically because you're getting more and more volatile at the end, and that usually is going to result in a decline.
That looks like a little bit of a parabolic after going public. My God.
Absolutely. That can be the danger with some of these, really. So let's go back here. So yeah, that's what I was looking at there, because my first thought was, well, you know, it's a little below this area of support, but maybe this is strong enough. I don't see it. Let's see. Next downgrade, TPH Tri-Point Homes. This one, you know, it looked like it was a good buy earlier, and not goodbye, but a good buy. When I got that, yeah, when I got that move on the PMO, that would have probably brought it to my attention. However, the 20 was below the 50, so that means it wouldn't have shown up on my scan. Good thing. So we can see that it's just turned right back down. We didn't actually get a bear kiss, but that whipsaw is not a good sign. Of course, looking at the volume pattern and the OBV falling like it is. Yeah, this is not a, you know, I like to look for downgrades as possible opportunity. And today I didn't really see anything too opportune about what we're looking at here. All right, so UPS also downgraded. The difference here is there is some possibility in that the PMO is trying to decelerate and turn up. But I mean, when you look at an OBV like this and you see a scooter in, you know, flatlining, and then you could also make a case for a reverse flag here. And boy, that flagpole's pretty long. So I don't think I'd be taking a chance on this. But looking at the weekly chart, let's just see where we're at here. Hey, we're on the air, Tom. Okay, so there you go with that reverse flag. Yikes. We are near the support level, though, at about 100, and it's sitting right about where it was back here. So we could be looking at a possible area of support, but I'd be watching that PMO that we just looked at. Let's go back to that daily chart. Here we go. I'd watch this PMO. If we do start to see it turn around and we see a breakout from this pennant formation, could be opportune. 2 upgrades real quick here. So I'll give you plenty of time for your... So this is an upgrade, and a lot of times the upgrades have kind of already made their move. I think that you could say that's probably the case here with FedEx. However, this probably would show up on my radar. You know, the 20 is about ready to cross above the 50. So while it wouldn't show up on my scan right away, it hasn't been rising for 3 days either. So I suspect this would end up on my scan soon. And you could see the scooter is improving. The OBV, you know, I would like to see a little bit more action. You could see volume sort of declining on that rising trend there. So another one to watch. If we can see that burst above that overhead resistance, I think you could have a shot here. But we need to really establish ourselves above that 20-day EMA and see that PMO start to rise a little nicer than that. Go daddy. Well, big gap up, almost 10% gain today. That would have been great to be a part of yesterday. And, you know, I think that looks pretty good. I saw this possible double bottom or double top that was forming, which is a bearish formation, and, you know, no problem there, you know, with that gap up. And you can see the PMO looks pretty good. It's getting really overbought, though, pretty quickly here. But, you know, you have a lot of internal and relative strength here when I look at that scooter. So, you know, while it's already kind of made a lot of a move here, maybe pulling back would be good. And I did look at the weekly chart on this one, and it does also have sort of the feel of a parabolic. So I would be a little bit concerned about that. But we did just get the upgrade. I'd need to see a pullback before I would even look twice, because it's already made such a big move. And that's the upgrades and downgrades for you. Are you about ready for your workshop?
I am. Maybe one thing we can look for on GoDaddy is maybe some sort of an island reversal at some point off this uptrend.
Ah, yes. And that would go right with what we're going to talk about right now.
Yeah, good segue.
Huge.
All right. Let's jump in here. what I wanted to talk about today, and I want to thank everybody for their responses and suggestions for a workshop. I think it's awesome, to get some ideas. And some of these ideas may not be workshops, but they may be segments in the future. So again, thanks to everybody for suggesting some various topics. I did want to go with the island reversals because we do talk about islands quite a bit on here, and they are significant in that many times they will give us some pretty good signals as to potential tops or bottoms on the chart. One thing I want to point out, though, and I'm going to start here with Broadcom AVGO. For you to get or to have any kind of a reversal, you have to have a prior trend in play. So that's where it all starts. You can't really have a reversing, you can't have any kind of reversing candle or island or pattern or anything without that prior trend. So perfect example here is AVGO, which had been sideways consolidating back in August through October of 2017. Then all of a sudden, look at the volume coming in, and we make this big move to the upside. We gap up the final high here. You see a gap up, and then the very next day, you gap back down, leaving this candle up here on an island. So this is essentially the definition of an island reversal. Now, it's really important to note a couple of things. Number one, you do need this prior uptrend in play. Number two, it does require a gap up. And number three, it requires a gap back down to leave that particular, in this case, sole candle on an island by itself. So the gap down confirms that top. And so that's what you want to keep an eye on and want to watch. The other thing is that this is not a long-term top. When you see these reversal patterns, this isn't suggesting that Broadcom is about to start a bear market. Or is going to begin downtrending. What it is a short-term top. And I would be looking at other indicators, other technical indicators to corroborate whether it's a short-term top or whether it's a longer-term top. Just by looking at the pattern itself, I'm just looking for a little bit of weakness. So when you get that gap down, you literally go down 1 or 2 days, and as far as I'm concerned, the signal was a successful signal. I'm not saying it's going to come down 10% or that it's going to come down to where the rally started, anything like that. In this case, AVGO, after confirming with this gap down, leaving this candle on an island, went all the way back down and actually tested the rising 20-day moving average, which I find to be one of the key support levels in an uptrending stock. So we bounced off of that, went back up, and it's interesting how you can kind of follow the technical just the technical direction and how everything evolves over time. But here, AVGO breaks back out again to new highs. But look at the volume on the next breakout versus the volume we saw here. Big difference in volume. So in addition to breaking out, there really were two momentum issues. Number one, you could see the volume was pretty light on the breakout. It was certainly no more than average, and that's a problem. Now, part of this could be that it was the Friday after Thanksgiving. That was part of the reason why this breakout had light volume. But we really didn't confirm it the next day with much volume. So I would argue that it still was showing lessening momentum to the upside. The other thing is the next day when we printed a reversing bearish engulfing candle, that's a reversing candlestick, PPO was lower. So now you've got a negative divergence with that false breakout on light volume. So anyway, I just wanted to kind of continue through, because when you're looking at these island reversals, just keep in mind that the uptrend is still in play. It's just short term. It maybe ran a little bit too far, too fast, and so we get the pullback, and then you have to follow your other technical indicators. It's not just a, oh my gosh, there's an island reversal, now we've got this long-term downtrend in play. It's not like that at all. Let's go through a couple of others here. And I'm really just going to go through and give you examples. I think the key is to spotting these. And as with anything, with candlesticks or patterns, you really just need to have more and more experience just seeing them, and then you learn to see them and anticipate what to expect after you see them. Here is CONN, C-O-N-N. Beautiful uptrend in play here. Nice expanding volume. Everything looks great. We get this gap up. And now it's not just one candle. We just don't gap up and then gap right back down. Here we gap up, and we just we move a little bit higher, a little bit lower, but for the most part, just sideways consolidating. And then we get a gap down which leaves all of these candles up here on an island. So it's like here we can move up, and then all of a sudden gap up, trade in this range, and then gap back down, leaving them on an island. So this is referred to as an island cluster reversal. So it's not always just one candle. It can be multiple candles where you go sideways for a period of time and then gap back down. But check this out. We came back down. What happened? We printed a hammer right on the 20-day moving average. So once again, this was not a long-term top. This was a short-term top. Came back down, tested a key area of support, and then back up again. So I would say, based on what we're talking about here, these signals are not necessarily signals you should pay attention to if you're a long-term trader. If you're a buy and holder and you want to be in a stock or in an index or an ETF or whatever, as long as it continues in an uptrending pattern, then island clusters and island reversals, these are not, they really shouldn't bother you because they're more for short-term traders. All right, so here we come back down. We get that test of the 20-day. Then ultimately we break back up above. Look at this candle here where we break above, and check out the volume on this. This is what you want to look for. However, we get to the top, and once again, we start to drift lower. We have negative divergence, higher prices. This time we actually had heavy volume, though, so it would be hard for me to argue negative divergence. And in this case, we didn't really sell off much. All we did is drifted sideways for a while. But notice again, technical analysis, TA 101, broken resistance, broken price resistance becomes price support. We come all the way back down to the level of the breakout. It took 5 weeks later, but we did manage to come back down and hit a key price support level and close to that 50-period moving average as well. Costco. Check this one out, all right? So we got this prior trend working, get the gap up. And by the way, here was a gap, and we went sideways for a little bit, but then we gapped higher again. So there was no island reversal there. Here we gap up, go sideways for probably 2 to 3 weeks. Actually, looks like about 3 weeks. And then look at the gap down. This was earnings related, I'm pretty sure. But gap down, left all these candles on an island, and then we downtrended for quite a while. All the way, actually, until we put in a lower low with a higher PPO, positive divergence, and that marked the bottom. So again, once you go through these periods of reversals or whatever, it's back to using your other technical indicators. In this case, huge sell-off. This is not a light volume pullback to the 20-day moving average. This is a massive sell-off on very, very heavy volume. Completely different animal at that point. The next one, Micron Technology. This one is maybe a little bit iffy as far as whether or not it's a candle. I was pulled up the chart, I looked at it, and the first thing I saw was, well, that looks like a little bit of a island cluster. But I prefer if they would just simply go sideways. This one kept going up and then went sideways this inside day the next day before we gapped down. But we did have a gap up, traded kind of sideways for 3 days, and then we had a gap down. You can see the volume really picking up. And in this case, we started breaking down on very heavy volume. FINL. Here we got a downtrend. Now, I've been, most of the charts, I was really trying hard to find a bottoming island reversal, but it's hard when you're in a stock market that's been going up for the last couple of years without too many pauses. I mean, the overall market hasn't really pulled back much. So it's hard to find stocks that actually go through an extended period downtrend. But here was one. Finish line, FINL, downtrending for about 6-7 weeks. You can see clearly we had a gap down from this prior high. You can see all of these candles in this cluster, and then a gap up on the other side. So downtrend, you got that trend in play, gap down, and then you gap back up out of it, leaving all of these candles on an island. And you can see what happened from there. So those are, this is, again, another signal that you want to look for. So it's not just on tops. You also have bottoms that form with islands and island clusters. All right, Delta Airlines. Check out the last high back in January, mid-January. Had a big move up, the final gap up, sideways consolidation for about 6-7 days, and a gap down. Left them all up there on the island, and back down we go. And so far, it's, this one is certainly trading by bear market rules. We're below the 20-day moving average, and we're struggling to get a close above it. right, ASML. I think these were the last two. What I thought I would do is just kind of open this one up to the audience. So I don't know if you could maybe look to see, Aaron, but I'd be interested if someone can tell me where there's an island cluster reversal on this particular chart, ASML.
Okay.
All right.
Watch.
Okay, and so what I'll do while you're taking a look at that is just pull up the chart. I mean, this is one that actually had come out with great earnings and had huge volume. And you can see there was one level of support. Here was probably a second level of support, and then the recent low that we had prior to the run up. So these were kind of three areas of. So I mean, we could go way down here, but I'd be shocked. I would not want this stock to come all the way back down to below 170 after making this huge move with earnings. But it did put in this hammer, started moving back to the upside, and right now is actually continuing to trade above its rising 20-day moving average. So I think ASML continues to perform pretty well. I mean, it did pull back a lot, but everything in the market sold off. I mean, I just referred to it as the baby being thrown out with the bathwater. When you get a high volatility sell off, everything gets sold. Market doesn't care. It doesn't want. Market makers aren't buying anything. So everything just kind of takes a turn for the worse until we see reversing candles and that volatility index reach a peak, which we saw. But any responses on this one, Aaron? I don't know if you've on mute.
I'm sorry. Can you hear me now?
Yep, I got you.
Yeah, the buttons didn't work right. Okay. Let's see. They're saying not earnings. I'm not seeing anything yet. I don't know if we're on a big delay or not.
Oh, in the chat room? Okay, well, I'll just go ahead and annotate here. What I was looking at is right over here.
Previous top. Yeah, that's what somebody just said.
Yep, right in here. I mean, you can see some pretty bearish candles. Here's one bearish candle, although the volume wasn't nearly as, well, it was kind of average. But yeah, sideways consolidation. You gap up and trade above this gap the entire time and then gap back down below all of this action. And so you're effectively leaving 2 weeks worth of candles up here on an island. Now, again, this happened to coincide with all the selling that we saw recently. And I tried not to pick these because everything sold off. So I don't really even know if this is a great example, but it technically is still an island cluster reversal off of an uptrend with an ensuing downtrend after a gap up. So this was one. I'll do one more, see if anybody can spot this one. This is IBM. And so see if you can find anything on IBM. Again, this actually, I'm going to annotate this one. This came down to a really good support level here. And I remember when John Hopkins was on from Earnings Beats, he talked about IBM after it had reported really good results, all of the selling. This is a perfect example, I think, of the baby being thrown out with the bathwater. IBM retreated quite a bit, over 10%, looks like maybe about 13% or so from the high, all the way back down to test this price support area and almost filled this gap, which is really pretty amazing. Back down below 144 before printing that hammer and going back up. You can see right now it's struggling to try to get back through its moving average, but it would be bullish, I think, if we get a close back up over, say, 157 on IBM. So still watching this one pretty closely.
Yep, they're saying that one was pretty obvious, actually. At least the smarties in the room.
I'm talking about which one? Where?
I think it was on IBM. I'm looking.
Yeah, the recent high. I was looking for it, but yeah, January is what I was looking for.
Yep, we got that too. Somebody, January 17, 18.
Yep, right there. So you can see here's your uptrend. So again, you want to have that prior uptrend in play. You gap up, and then you gap back down, leaving those candles on an island. Now, again, this kind of has coincided a little bit with all the selling. The real selling kicked in over here. So we did have an island reversal before all the weakness hit. But notice as we tried to rally, we couldn't get back up into this zone. And then we eventually turned back down and went back down, found a bottom in the mid 140s, and now started to turn back up. All right, last one I wanted to mention, because this is just a final. All right, trying to get out of there. There we go. This is the final one. I wanted to show you why you got to be careful about assuming that you see an island cluster reversal and you decide, okay, I'm going to short it before you actually get the confirmation. This is what can happen to you, so be careful. FedEx, we were just talking about this one a little bit ago, but here is a beautiful move up. Check out this gap up, sideways consolidation. That looks like an island cluster to me, but do we ever get the gap down to confirm it? And the answer there is no. We break out to the upside. So for those of you who like to anticipate these moves, I would be really careful doing that, especially in a bull market, because many of these sideways consolidations and these cluster reversals also can be a flag. So you got an uptrend, and this can be a flag, and you can get a bullish breakout. So be careful that you don't try to jump the gun and be a little premature into a position, or maybe sell the position because you're nervous that it's sitting in this island cluster. You don't want to hold it until that gap down. Well, that's a problem in the market in general. I mean, your trades can always fall apart. There's nothing wrong with this pattern until you get that gap down to leave these candles on an island. So in this case, I think that you remain in a bullish pattern. We never got that gap down, and in fact, we ended up breaking out. And it wasn't until we printed this final high with the PPO rolling over that we started to see the selling in FedEx. So that's really what I had for today for this segment. Appreciate everybody tuning into it, and I'm going to turn it over to Aaron. I know you got some mailbag questions. Actually, before we get into that, let me just go through quickly the summary here. And that is the keys for these island reversals. Number one, you do require that prior trend. So if you got sideways action and you gap up out of that, or you got sideways action, you gap down, that is not an island reversal because you don't have any stocks on an island after an uptrend. So you do require a prior trend. The gaps represent exhaustion of the current trend. So the gap up, you're getting the final people on board, at least in the short term, and then you gap back down, leaving all of those candles on an island. So I would consider these only for short-term trading. I mentioned that earlier. If you're a long-term investor, and you're looking at weekly charts, you probably could care less about island reversals. These are much more, they're much better signals for short-term traders. And then the final comment there is, as always, use other technical signals for corroboration. So after you get these reversals, you can be checking out volume. You can look at gap support. You can look at the rising 20-day moving average. Those are areas where you might want to re-enter and reestablish your long position if it was a long candidate.
All right.
With that, go ahead, take it away.
All right, let's hit it. So you did a mailbag, I think, last Friday for you. So I'm going to do a mailbag kind of addressed to me, but I think a lot of general questions as well. So I'm going to start with the question number one, and that came, I'm sure, off of what we saw yesterday when Grayson talked to us about all of the different chart styles. Let me steal the screen here. So they wanted to know how to create your candle glance style. So for those of you, just a quick refresher, candle glance is where you can get all of the charts, most of them, in a little thumbnail and look at them that way. As you can see, a lot of people are like, wow, I like your candle glance. Well, how do you change that? It's actually not too hard, and I'm going to show you very quickly. Let's just take forward because it's easy to do. So what you want to do is make this exactly the way you want your candle glance. So if you want the PMO or you want the PPO or you want OBV, any of that, go in there, make it exactly the way you want for your candle glance. And I highly recommend you keep it simple. Pick one indicator, maybe two, and go from there, because otherwise, you could see those candle glance thumbnails are pretty small. So you want to change that. So after you have it all fixed the way you want it for your candle glance, you go in, and in this case, you would add new. I'm not going to do it because I don't want to mess up my candle glance. But you would add a new chart style here, and you would save it simply as candle glance. So here's the one I have that I like for my candle glance, which you just saw a little while ago. And So that's how I did it. I set it up and then you just save it, the chart style as candle glance. So that's the first one. The other question we get, I would say nearly every single day in the commentary and in the comments and as well as in the email is, I want to watch your show, but I don't know how to get to the archives. Okay, two things. This is the easy one. If you go to the webinars tab and you hit watch now. Well, currently, of course, we're live. So you're going to get our live program. But if we're not on air, you're going to be able to see the latest. So whatever we recorded last is going to be here in the webinars tab. So that's how you can get to the most recent show. But say you want to get to, you want to go back and listen to Arthur, who was on here on Tuesday. So you want to go back and find our channels. So go to YouTube, do a quick search on stock charts, all one word, and there you are. And here is our stock charts YouTube channel. You can subscribe to it as well. And here you're going to find your videos all listed the way you want with, brief discussion. So here's Julius when he was on. There's my workshop. And there's Arthur's. So you can just go here and click on them, and that's how you can get to our archives. If you're big on Facebook, you can also go there. Just subscribe to our Market Watchers Live Facebook page, and you'll find our videos there as well. The other one I get all the time is, how do I get your PMO scan, Aaron? I love the idea of having that scan. This is also easy and actually is going to come into play for another question. So here's where you want to go. Go to the Market Watchers Live blog. And here's how you get to our live chart list right here by clicking on that. That's our 10 and 10 and possibly a couple of charts. Like I have Arthur's charts in there if you wanted to look at his. So you just go into any of these. The recap, yes, there's not much to it, but you're going to get the basics. And if you're getting ready to go to YouTube to watch, you can get timestamps here on the Market Watchers Live blog page. And at the very bottom, sign up to get the emails right there. And you're going to see at the bottom of every one of these articles are links. There's our link to the Facebook page, the YouTube channel, and there's a link here to the article I wrote on my favorite PMO scan. So that's how you get to those. Let's see, what else? Somebody was asking me what I consider to be, short-term and intermediate term. What is that time scale? And I think that a lot of people have their own sort of definition of that. But I think typically, and I can tell you what mine is. And again, I'll just bring up a random chart here. Okay. So typically to me, I generally look at a daily year chart, annual chart. So when I think short term, I think thumbnail. I think days. I'm looking in terms of days in the short term. What's happened recently? Days is pretty much what I'm looking for as far as short term. Intermediate term, I start to expand it out, and now I will look at days, but I'll also consider weeks as well. And so I'm looking, this right here would be considered intermediate term, and there's that gap. We were talking about gaps. In this case, that would be a breakaway heading lower, not very likable, and a negative and a reverse flag. So all of those are not good. All right, so that is the time frame. The other question that sort of piggybacks on top of this is, how do you figure out when the PMO is overbought or oversold? Because I talk about that a lot, obviously. Well, I think the quick answer, of course, is oversold is on the bottom and overbought is on the top. Well, that's somewhat helpful. But with the PMO, each stock, index, ETF, they have their own normal range, I call it, where they typically trade, or where they typically, the readings are going to go top to bottom. And the easiest way to figure that out is to just take your daily chart and stretch it out about 7, 8 years, however you want to do it. And then I like to annotate it just to be clear and make sure that I know I'm doing what I think I'm doing here. All right, so I kind of look at this, and in recent time, I'm seeing that the 2.5 to minus 2.5 could possibly be considered overbought, oversold, but I suspect we're looking more at a 5, -5. And you can see that's most of the PMO values are in there. So obviously now you can say, okay, oversold is close to a reading of 5, and overbought would be closer to a reading of -5 and then 5 for overbought. But as you can see, it's a good thing to look at this because you can see in the last, 3 years or so, the top of the range has been closer to 2.5 and 3. So you could use that as well in your analysis. But taking it out longer to figure out whether a PMO is overbought or oversold and finding the normal range is what will help you with that. Let's see. Somebody asked about what kind of a benchmark I have, Tom has. Typically, what kind of benchmark do you want for your portfolio? And the question was, are you looking for 10%, 20%? Well, of course, we're looking for the highest percentage, but we need a benchmark. What are we comparing it to? The typical thing to compare it to is the S&P 500. You want to do better than that. So your successful trader, typically, if you can beat the S&P 500. All right, let's go on. Let's see, help videos. How do I figure out how to, do the various things on the chart? Well, of course, everybody has a help section. But these are the best areas. And here is where you can get the videos. So if you learn better watching somebody do it, like you watch on the show, here are the videos you can look at and learn a bit more about how to use the site. It's pretty helpful. So let's see. And then finally, somebody asked me about the dollar versus gold. And I actually wrote a blog article on this yesterday. Your questions when they come in or when I look at something on the show, a lot of times that's great fodder for articles. And I am more than happy to talk to you about, to add those to my articles, to take a question and expand on it, look at a particular stock maybe and do an anatomy of a trade, that sort of thing. So always feel free in the comments, you can send me emails and let us know, Market Watchers, what you might want to see in some blog articles by Tom and I. Makes our job a lot easier. So I did do an article about gold versus the dollar. So, I would suggest going to read it. I'm not going to get too far into it, but, everybody's like, well, why are you, so bearish on gold? Well, I pretty much explain it. But the question was more about, how they travel together. And so I used the correlation tool just to show you how the dollar and gold are correlated. And typically, most of us are of the understanding that they are inversely, you get an inverse correlation. They're highly correlated in the inverse direction. So if the dollar goes up, gold will typically go down, that sort of thing. So gold is kind of tied to the dollar because it's obviously expressed in dollars. So what happens to the dollar can definitely affect what's going on with gold, but not vice versa. Try not to get that mixed up. Just because gold is going up, that doesn't affect the fact that the dollar should now go down. It doesn't work that way. But, if you go this way and watch what's going with the dollar and follow it through there. But I also noted that, sometimes they don't travel together. And that was a question in the chat room today. What about that? Are you worried when gold goes down and the dollar goes down? Well, certainly I worry about gold when that happens, because if the dollar goes down, that usually helps gold, rally. And so if I see both of them going down, that tells me that not only were there problems with the dollar conversion there to gold, but there's also a preponderance of sellers when they both go down that way. And I know I don't know if they still do it, but there is a website that I used to go to, kitco.com. And let me see if they still do what they used to do. There we go. Did gold really go down, whatever it is? And if you click to find out, they give you an idea of exactly that. So with gold, it says decreasing due to the strength of the dollar. It tells you how much, and decreasing due to the trading. So you can look at this point, it was gold price decreased due to the strengthening dollar, about half, right? So that gives you an idea, and predominant sellers. So I think that's very helpful, and hopefully that gave you a pretty good idea on what we're seeing right now. So if you want more, discussion of, what's going on with it and my feelings about each of those, I recommend you go to the Decision Point blog, of course. If you don't have it bookmarked already, go do that. So you can just go read my article. And I highly recommend, anytime you see these DP alert icons, that means that I'm doing my review that I do for you guys on Mondays, where I go through all of the indicators and the big four: dollar, gold, oil, and bonds. So I give you my view of all four of those and the indicators. And I do this typically Monday, Wednesdays, and then on Fridays, Carl does the weekly wrap, which is all of the same things I talk about in the DP alert, only we look at it in a weekly or longer term view. And with that, I think we can start with our 10 and 10. I didn't have a chance to put all together the stocks on an RRG, so I won't be doing that for you today. But Tom, I know we're starting off with Cracker Barrel, so I'm just going to pass it right to you, and let's get on.
All right, let's go with it. I actually already annotated this one. I put it on that relative chart. I'm going to scroll down first just so everyone can look at the settings, and you can come back and look at the recording later if you want to set up a chart similar to this. I like it because it compares, well, first it gives you the chart on CBRL by itself. I think clearly we had a nice breakout here in early December, clearing about 157.5, went back and tested that level. All the selling that we saw recently took us back down to that 157.5 level as well. So I think that's a pretty good area of support. Notice the volume has been very heavy on the selling. That bothers me. This is not a light volume pullback, but so far it is holding support. But as I go through these other indicators, here's the restaurant index. And you can see the restaurant was doing very well from the end of October through about maybe 4 or 5 weeks ago. And then we broke this trend line. And you can see that we have been selling off. Now, a lot of different areas broke their trend lines. So that by itself, again, I'm not going to be overly concerned about. But when you look at CBRL, Cracker Barrel, relative to its peers, it has broken this uptrend line. And when I look at CBRL relative to the S&P 500, it's broken its uptrend line. And then when I look at restaurants relative to the S&P 500, you can see we just recently broke down to a multi-month low, actually even going back below the March of 2017 relative low here. So this is a group that is not performing very well relative to the S&P 500, and I'm showing signs of this stock not performing well on heavy volume. So when I put all that together, I'm not a fan. Erin and I were talking about this before the show, and I know she's a fan of Cracker Barrel. I am too. As far as eating there.
Yes, is eating.
As far as actually this stock, I think I've lost my appetite.
There you go. Man, that place, oh my gosh, heart attack on a plate, just about everything.
Oh, that's good, though.
Southern food. Boy, I love it. Okay, now I'm hungry. How about Caterpillar, CAT?
Yeah, we need to stop talking food.
I know.
At the end of these shows. Okay, Caterpillar. Caterpillar, I think looks good to me. We did, go down with the overall market. Everything went down, so I'm not too overly concerned with that unless those lows are lost. But we have moved back up. We've gotten through these moving averages, which I find to be short-term bullish. If you look at its group, the heavy construction area, commercial vehicles, you can see that the overall industry group has been moving higher throughout the past year, and it really made a couple of huge moves, and it was entitled to a pullback, which we got. I think when you look at Caterpillar relative to its peers, you can see that you've got one of the best stocks in the space. And if you look at Caterpillar relative to the S&P, you've got a stock that's continually been outperforming the S&P 500 over the last year. And then finally, I think you got a pretty good group, even though, again, the last month has been a little rough. I think it was entitled to it. We've seen that before where the group pulls back for a period of time. I think the more important thing is that this trend continues higher. So I think you've got a good stock in a good area, and that area is outperforming the S&P 500 or has been for the last several months. So I like Caterpillar. I think this is one of the better plays.
All right. We have in the energy space, ExxonMobil, XOM.
All right. Just wanted to...
Giant reverse flag if you want to go that direction.
Yeah, I think I put ExxonMobil in my blog this morning. I tell you, that is just, when you look at the XLE and the fact that it's been underperforming so much, it really comes down to three stocks that have been horrible. You've got ExxonMobil, which has been awful. You've also got Schlumberger and Chevron. So let's pull up ExxonMobil. I do like the action today so far, trying to clear this area of congestion. So $77, I think it'll be nice if we could get ExxonMobil to close above that. Now, it's not completely out of the woods at that point, but that would at least in the short term give us a chance to go up here and hit this declining 20-day moving average. And that's going to be the first really key technical test in my view. So maybe you've got room on ExxonMobil to 78.50 before we get to, or 78.68 is the 20-day moving average right now. But that will continue to drop. If we can get a close above the 20, then I think we have more room to run on ExxonMobil. But if I was short-term trading it because it was down here at support, if I got $2-3 out of it and I got back up around 78 or a little above, I would take the money and run. You can see that its industry group has been very weak, obviously, because of ExxonMobil. And then you can see relative to its industry group, ExxonMobil has not been a great performer. We did get into a nice little run there for a little bit, but we've given it all back, and this longer-term downtrend remains in play. And you can see relative to the S&P 500. If you're trying to beat the S&P 500, ExxonMobil is not one of the stocks really that you want to be trying to beat it with. And then finally, look at the industry group relative to the S&P 500. So you got Exxon, which is one of the laggards in the group, and the group itself is a major laggard to the S&P 500. It's hard to make money and certainly hard to beat the benchmark index when you're trading a stock like this. So I think for ExxonMobil, what I would simply watch is that 20-day moving average. I mean, until we can get through that moving average, I don't think we're going to have a whole lot of success here. So it's an avoid for me right now.
All right. In the retail REITs industry group, WPG, Washington Prime Group.
All right, I'll continue to look at it on here, but I'm just going to annotate. Yeah, I think it's pretty clear that we are right up against some major price resistance here. So let's annotate the price resistance coming across here. You can see the bottoms from back in, was that May of 2017, and then again in November, and all these multiple tests at about 665 or so. We lost that area. Volume picked up, although volume wasn't huge to the downside. Now we're coming all the way back up and testing it again from underneath. If we can get a close above 675, I might start, especially if the volume were to pick up, I'd be a little bit more bullish. I think if we go back and take a look at these highs and these tops, you can see that we've got both trendline resistance and price resistance coming in right near this area. And earlier we got up to 676. Now we're back to 669. I don't know, in the short term, this may be an area where we see failure. And if you look down under the, the actual group itself, it's been weak. And clearly, when you start looking at relative strength, when you're in a group that's down and the S&P's been going up, you can see that all the relative strength lines are moving lower. So I don't like this, and especially given the run that we've had up near price resistance, I personally, if I was in it, I'd sell and take the money here.
All right. Can you show people how you do those relative setups on your chart? So we get a lot of questions about that too.
Yeah, I scrolled down earlier.
But let me, yeah. So honestly, guys, if you see one of his charts you like, just click on it and then scroll down, and this is what you'll get. And you can see how we set up our charts. So
yeah, any of the blog articles, mine, Aaron's, anyone's, if you see a chart and you like and you wonder how it was set up, like Aaron said, you click on it and it'll ask you if you want a live version. You get that live version, and then you can scroll down, look at all the settings. You also could save it at that point. Really cool features.
Yeah, absolutely. And we like to give you those little tips and tricks. All right, Stemline Therapeutics in the biotech industry, STML.
Oh, that's stem cell. STML.
Mm-hmm.
All right. Well, a lot of these smaller biotechs have really been on a roll. When I showed the scooters the other day, the top scooters and the small caps, they were almost all biotechs. You look at the mid caps, almost the same thing. A lot of these companies have done very well. And what I'm seeing is stair stepping. Now, first of all, this is going to be much more aggressive than many stocks that we pull up, certainly more aggressive than like a Caterpillar and those kinds of companies. So just be careful when you're trading these. But this is a major support level here down around the 12.5 level. You can see also just recently we broke out above, let's call it about 1680 or 1690. And check out the volume picking up on that breakout. I think that's important. So I think the stock overall looks pretty good. We had the last move was straight up, sideways consolidation, breakout. I think this one could measure up close to 20.5, 21.
All right. Next one, making me think about going shopping today. Michael Kors. KORS.
Yeah, for some reason it's making me think about having a beer. Oh, wrong course.
Where our minds are.
Hey, it's Friday. Give me a break. It's 5
Yes,
o'clock
it
somewhere.
is.
It's 5 o'clock somewhere. Okay, Core's big breakout there, huge volume. I think it established two key levels that we have to watch from a price perspective. And I'm going to say 70 down to about 59. I mean, we could go all the way down to the recent tail on the downside, but really for me, it's about the high there and the low right there where the hammer printed. So maybe even 60 to 70, something like that. But when you look, this is the clothing and accessories index. This is a very strong part of the market. Go down further, you can see Core's relative to this group has been pretty good. And even though, you know, we're kind of going sideways here for a while, that's not bad when you've got the overall index going up as high, you know, as fast as it's been going up. Core's relative to the S&P 500, very strong. And of course, you can see the relative breakout that we saw in the clothing and accessories index versus the S&P 500. So I think this is a good stock in a good space. Closer I could get it to support near 60, the better I like it.
All right. I was just thinking we should do like the Today Show, right? Don't they drink wine? We could drink beer and do our show.
That's probably not a good idea.
Yep. Okay. It would get really interesting, I'm sure. All right. QNST, Quinn Street. It's a media agency.
Yeah, this is one I talked about the other day. I actually own this one.
Oh.
And I saw the question in the chat room asking what's going on with it or something. I'm not quite sure the question. I mean, it continues to move up. I think it looks pretty strong here. Now, on a relative basis, you can see actually in the group itself, you look at it and you say, well, it's been downtrending. Well, the thing I like about it is, number one, if you look back, it struggled to get through its 20-week moving average, the media agencies index. That's the DJUSAV. It is moved back above that 20-week moving average, and it's one of the areas that's starting to show some signs of strength, similar to what we saw with renewable energy a little over a year ago, or maybe a year ago, and home construction. Those two groups ended up being the best performing groups in 2017. So a lot of times if you want to get into a group, you have to see that strength early. I'm not saying that media agencies is going to turn out like home construction did last year. That would be a huge move for the industry, but it is starting to show some relative strength based on the moves up above its 20-week moving average. So that's the reason I like the group. And then QNST, as you can see, relative to its peers is one of the better stocks. So, and when you look at the chart, you can see it's breaking out. We just had this huge sell-off, and here QNST is up near its recent highs. So I think that the overall chart, see the volume has been solid on this move as well. Here's QNST relative to the S&P. It probably should be relative to the Russell 2000, to be honest. And then here is the media. If you connected all of these highs coming down here, you would see recently in the past couple of weeks, few weeks, we actually have made a break out of that relative downtrend line. So if we could get this group to move back up on a relative basis to a new relative high, I think that would be very bullish, not only for the group, but also for the stocks within the group that have been performing well, like QNST. To the downside, I think probably the key area is going to be between 10.50 and 11. So it just depends how much room you want to give it. But where I'm getting that from is you can see the earnings came out at about right after earnings 10.50. That was a pretty big move. And then the prior high was at about 11. So on this volume, I think anything down around 10.5, 11 would be awesome. Now, if it were to go back down there, I'd probably be out and waiting to re-enter. I think it's got a nice trend line here. This goes back down below about 12.75 to 12.85. I'll probably lick my wounds and move to the sidelines and see if I can get it lower.
There you go. All right. We haven't done ETF in a while, and I know we talked small caps. How about IWM, the Russell 2000 ETF? My PMO is looking good. It's just about ready to have a crossover, but I'm still a little bit tentative about the market in general. So,
yeah, I've talked a lot about the dollar and how I think that could have a positive impact on the IWM relative to the S&P 500. So if I'm right about the dollar and the dollar does bounce, and the dollar index holds the 88, 89 level and makes a move back up, a few dollars, I'm expecting that we're going to see continuing relative strength. Now, this is a flag formation off of the recent low. So if we take a look at this, here's what you need off of an uptrend. There is your uptrend. And since then, we have seen sideways consolidation. And so I'm just going to kind of just draw this in here. And then if you grab that line, actually, and hit the command and left clicker, you can actually just draw another line that's not perpendicular, but parallel. And so there is the sideways consolidation that we've been seeing with the Russell 2000 after this move up. I think if we can get a close back up above this gap resistance, which comes in at about 154, I think a close over 154 on the IWM would be a very bullish short-term signal. So that's what I'll be watching for.
All right. Telecom equipment industry, go.
Go. All right. So we talked about GoDaddy. Now we're going to get go.
Mm-hmm.
All right. Let's see what the chart looks like. And I just went to a daily chart just to try and speed some things up. We're down near support. I don't know. We got this downtrend. I think this whole thing, it's almost like a reverse cup, although the handle was way too deep on this last rally. The overall trend here, given what the market has done, is just not good. So I think I'd really respect the price support level that is in play. And that was the prior low. And then we actually have a more recent low. So I'm going to say between 860 and 875, maybe in that area, is where we want to see support hold. We're at 870 right now, so we're in this zone. But look at the big selling, heavy selling that's been taking place. I'm nervous with this one. I like to get stocks in uptrends at support, not stocks in downtrends at support. So I would pass on it. Definitely keep an eye on about 860 area, though. I wouldn't want to own it if it goes below there.
All right. And snap. We're at the end of the 10 and 10. So let's do snap.
Yeah, I answered this one in the chat room, but I'll go. I feel good just to let everybody know maybe visually what I was talking about. This is how I trade. I trade earnings gaps. I would say probably at least 75% of my trades are based on earnings gaps. This company came out with much better than expected top and bottom line results, which is part of my trading strategy. I like trading stocks that beat Wall Street estimates. And then not only did it do that, but when it gapped up, most stocks, when everybody wants to buy, market makers provide liquidity. So they're on the other side selling short, which is why many times after you get gap ups, you'll get black candles, or you'll get a stock come all the way back down, fill a gap. We talked about Huntsman earlier in the show. Huntsman Corp came out, great earnings, gapped up, went all the way down in negative territory. Now it's trying to recover again. It's because a lot of folks, when they're buying, market makers are getting on the other side of that trade. So in the short term, it's much more normal for a stock to gap up and then to start falling back. When you get a gap up like this on this kind of volume, and then you see a huge hollow candle, to me, it really just reeks of accumulation. You gap up from 14 to 17. Market makers are on the other side of the trade, and the demand is so great that the market makers end up having to cover their shorts and go long the stock because of the huge move. Now we're getting a second chance to get in at that level. That's the way I look at it. So I think you've got some intraday support around 16.95. I think this open was at 17.15. I get a little nervous when it gets down around 17 like it did yesterday, but it did hold, came back up, so far holding the rising 20-day. I think there's a lot of good things here. The best thing of all, though, is that we're much closer to support than we are to resistance. To me, this is the trading range right now on Snap. So if I can get it down close to the low end of the trading range, and I can then sell it back toward the top end of the trading range, that's going to be a pretty nice profit. What is that, three and a quarter, something like that? Probably about 18% if you're getting in closer to 17 and a quarter. So yeah, I like Snap. I think the reward to risk looks solid here, and I own.
Excellent. And that actually completes the 10 and 10. You'll be able to see shortly the list of symbols that we covered. There it is. I will have these up in that Market Watchers Live chart list. Remember, you can get to that by just going to the main Market Watchers Live blog page, and the link's at the top. And with that, let's go ahead and move on. I did want to mention one thing that we always are mentioning, and that is that ChartCon is coming up August 10th and 11th. It's an online conference. Join it. It's just like what we're doing right now, only way more fun because we have a lot more presentations, and you actually get to see us present. It's not just our disembodied voices out here. So it should be interesting. You've got the agenda there if you want to take a look. And of course, we are still taking reservations. If you want to join us in person as a VIP, you can be there for the entire event. First front row seat, wherever you'd like to be, meet all of us. And then if you really want to get into it, go on the cruise with us afterwards. We're going to have a lot of fun with that. So wanted to let everybody know about that. And then I'm going to, let's go right into our final market update, and then I'll start covering sentiment. So Tom, you can go to sleep, I guess, till the end of the show.
I'm good.
All right. So let's look at what's going on in the market right now. And I'm going to refresh this. I changed it up just a little bit. All right. So as far as the major markets, we can see they're all up at this point. The Dow is doing well. You know, we had these intraday highs set here. You can see it on the S&P 500 and the NASDAQ. And we're now starting to pull back a little bit from that. And, you know, what I would note is the fact that although we were able to get a little bit above yesterday's high on the Dow, we are struggling here with the S&P 500 hasn't made it yet above that point, and the NASDAQ just about, but not quite. So I'd like to see higher tops there. We can see Russell 2000. We already talked pretty extensively about that in the 10 and 10. You can see that as far as Canada, the TSX gapped up and consolidating mostly sideways right now. Treasury yields are lower. And I added TLT here, the bond, 30-year bonds. And you can see we got that big gap up. And it's starting to curl over a little bit, but still reading higher at almost 118 right now. UUP, sort of choppy today. We're sitting around intraday lows, but we are up 2 cents, 23.47. Commodities are higher, forming a very short-term flag. USO hit its intraday high. It's been pulling back somewhat, but it's still looking pretty good at $12.76. Gold is lower today, gap down. It is trying to make a resurgence here at the end, but we're still in the negative territory. Volatility index has fallen. We're now getting readings just above 17, which tells me that people are getting a little less concerned about the market. Let's go ahead and take a look at our market summary very quickly. We'll see which industry groups are faring the best. And sector spiders, utilities leading the way, up over 2% right now. Industrials, the only laggard among the spiders, and it is down slightly right now, reading 76.99. And we can see industry indexes. Currently, telecoms and utilities are leading the way, with telecoms up over 3.4% right now. Commodities are the laggard, but they are still up 1 cent right now when you look at dollar BCOM. International ETFs, India and South Korea are the leaders, up over 1.5%. And the laggards today, Russia and the Mexico ETF, the only two right now in negative territory. And with that, I'm going to go ahead and move into my sentiment so we can get started on that. All right. I had it all set up on here and then I went and erased it. Okay, I'm just going to go down here to my sentiment indicators and let's take a look at what's going on right now. So today I wanted to concentrate a little bit more on the OEX put call ratio, the 10-day moving average, because we've now hit a top and we are starting to head down. And typically when you get those nice, you get the bottoms on the other ratios, you'll get a top on the OEX put call ratio. This one, the OEX put call ratios, from my understanding, are used a lot of times as a hedge. But what I wanted to point out was that we were at a top and we are starting to head back down. And typically when we see these tops on this particular put call ratio, it is considered bearish. And you can see we've had either some declines, maybe a little bit of consolidation. Of course, these aren't 100%. They're not going to always work. But just to give you an idea of what we're looking at, you can see the last top came in right before that consolidation zone. We've just now gotten the top. This could be all we're going to look at is a little bit of consolidation sideways, but I am still of the opinion that we're going to go down and at least test this prior low we're seeing on the S&P 100, at least on this chart. So with that, let's move on to our AAII investor sentiment. And not too much of a change here. Slight rise with the bears and a slight decrease in the bulls. So our ratio is reading pretty much we're looking at twice as many bulls as bears. And so, of course, that means everybody's feeling very bullish. Sentiment being contrarian. If people are feeling very bullish, that is bearish for the market. So that's not particularly great news there. When I look at the exposure, and this is the National Association of Active Investment Managers, this is a great sentiment tool. Shows us how exposed the big guys are to the market. And you could see we hit our highest, I think it was our highest reading since we've been tracking this back at the end of December here, you can see. Since we've been pulling back, they've been pulling back their exposure. We got a bit of an increase here. But we've backed off just a little bit right now. I kind of read these as, somewhat bearish to really more neutral because we're sitting kind of in the middle as far as our range is concerned here. So I'm looking at as far as the active investment managers. Yeah, they pulled back their exposure slightly, but I think overall it's still pretty neutral reading. Let's see. I haven't looked at the gold and silver sentiment yet, and I didn't include it on my summary chart, but I just thought it would be interesting to show you. I wrote about this again in that article last night. But what we do is we watch the premium and discounts. And typically, it's a closed-end fund. So when an investor buys it, there's hard assets there, and so it's worth a certain amount. So they either bought it at a premium or a discount. So we want to see a lot of discounts. That means things are very bearish. And that's usually when you get the turnarounds to the upside. And as you can see, we just haven't had that much in the way of bearish readings in comparison to what we've seen previously in 2017. We are elevated as far as for the year, but we have pulled back a little bit on that. So I don't think things are bearish enough to be bullish for gold yet. All right, the RIDEX ratio and assets. This, I always explain it, and I hope everybody doesn't get tired of it, but RIDEX has a basket of funds that we track. They give us the assets in each fund, and they have bear funds. They track the money market assets as well, and then they have the bull and sector funds. And so we track the assets that are going in and out of these areas of these mutual funds. Excuse me. So what are we currently seeing? We are seeing a pullback on the assets in the bear funds. So we're actually seeing money now starting to leave the bear funds and leave money market area slightly. We're not quite seeing the money going into equities right now. But the fact that we're seeing a pullback on these bear funds and money markets tells me that investors are feeling more bullish. And again, contrarian for the market, that is a bearish sign. So what do we have here as a conclusion to all of the sentiment? And that, yes, Tom, I finished pretty early today. So let's go through it. Right now, we're seeing, as far as the put call ratio, I'm looking at that overbought OEX. It's bearish for the market. We can see that the AAII, the American Association of Individual Investors, people like you and me who go take the survey, that is elevated as far as the bull bear ratio. So we still are seeing a lot of, we're seeing more bulls than we are bears. So that's somewhat bearish for the market because, again, contrarian. Sentiment is contrarian. Remember, the name exposure is still pretty stagnant. So I'm rating that as mostly neutral for the market. So we're just not getting a lot of information there. As far as the right-X ratio, you know, we're seeing a stagnation in the bull funds. And then we've got that decline in the bear funds. So that is considered somewhat bearish for the market because obviously investors are starting to feel more comfortable about what's going on and pulling their money out of those hedge type funds, the bear funds. And as we can see, as far as a conclusion, I would say when you tally all of this up, it's bearish for the market. And so sentiment currently, I think, is reading bearish overall. So people have asked me, actually, I'm going to talk about this a little since I have a little bit of time after I cough. You know, what is the point of looking at sentiment? A lot of people say, what is the point of looking at your indicators, and especially those climactic ones that tell you what's going to happen just the next day or two? And, you know, why is it important to even know about the sentiment? If I'm looking at a particular stock to invest in, what does this have to do with anything? Well, I think most of you out there understand that as far as decision point analysis is concerned, you don't only want to look at trend and price trends for a particular stock or maybe sector. It's really important to know the overall condition of the market itself. What are your indicators saying about the overall condition of the market? Is it overbought? Is it oversold? Are we seeing, you know, indicators rising, indicators falling? Sentiment. What is sentiment telling us about the condition of the market? It's just another tool. You need to know what's going on in the big, you know, it's great to get in that stream as far as, you know, your stock and you're going down the stream, but it's really important to know what's happening with that river that the stream is coming from. That's going to help you determine, you know, how well your investment may or may not work out. It's similar, Tom, I think, to what you do when you look at industry groups and then sort of narrow it down from there. It's really important to know what the big picture is before you start drilling down into the weeds, I guess you could say.
Yeah, I think you know, I'm always interested in price and what's going on with price and volume. That to me is the single biggest combination of indicators in the market for me, my style.
Mm-hmm.
I like, if I'm getting a breakout and the volume supporting a breakout, I'm going to be, you know, essentially I'm going to be pretty bullish. But you do get to a point where I think you need to take a step back because you can get euphoric and, you know, and not really see the forest for the trees. And so part of my analysis is always looking to see where the money is rotating to, because you know, if you study history, the bull market advances are just about every time supported. Sustainable bull market advances are just about every time supported by money rotating into aggressive areas of the market, because traders are willing to take risks. And if you're not willing to take risks, if the overall market, you know, gets to a point where, you know, and sentiment may build to the point where, you know, they just feel like market's gone too far too fast. If you start seeing too much rotation into defensive areas of the market, especially if those defensive areas begin to lead the market to the upside, that is a market that is not on great footing. And so, yeah, I mean, I think it's really putting everything together. If I'm just looking for a particular trade, then I can look at one chart and say, okay, yeah, I want to buy or I want to sell. But if I'm talking about my overall strategy and how bullish I want to be and how many positions I want to have and what types of positions I want to have, I think that's where you have to have a better understanding of what's taking place in the overall market and whether or not, you believe that a advance is sustainable or not to the upside. So that's why, I mean, this is the first time we've had anything to evaluate in terms of a pullback in a long time. I mean, going back at least a year and a half, I would say, since we've had it really since the election, 2016, we haven't had this kind of selling. So this is really our first opportunity to see if the market rallies back, what happens to it. I mean, is it going to continue to see, technology and financials and industrials and consumer discretionary? Are those going to be the leading groups as we go forward, or is money going to start to rotate? And if it starts to rotate, then I think we're starting to get maybe some cracks in the foundation.
Right. Exactly. So that's why I look at sentiment. That's why I look at the indicators and what they're doing. And, right now, I don't know about you, Tom. It is Friday. We got to make our decision as to what we think the market is going to do next week. Oh. And I know I came into this week as bearish.
I did too.
Yeah, I think we did okay.
Hovering.
Yeah. But so next week I'm going in as bear. I'm still expecting to see more of a pullback rather than consolidation. That's what my indicators are telling me as far as the short-term PMO as well. That's what I'm looking for.
Yeah, this is a tough one because, I was a little nervous when we lost 20-week moving averages, but we've seen all of our major indices back up above those. And so I'm going to go bullish. I think the market's really showing me something here. I'm really watching the VIX. And, of course, I have to make this call now. I don't know where the VIX finishes at the end of the day. But the VIX is really dropping, and it would close at its lowest level since back in, I guess that would be February 2nd. Today, actually, February 1st. This could be the lowest close on the VIX since February 1st. So I think the market is, kind of taking all this in stride. I think one of two things is going to happen, which means probably going to be whichever one I don't pick. But I think that with the VIX at the level that it's at right now, we're either going to get another downturn in the market and the VIX is going to spike one more time, or we have seen the worst of it. The VIX is going to continue drifting lower, is going to go below that 16 level, and we're going to see this bull market continue. I think it's going to be one of those two, and I don't really know at this point where we're going to be at the end of the day. Well, I know where I'm going to be. I'm going to be on the golf course somewhere. I got to get away from this. This is my first chance to golf, and probably I don't think I've golfed since maybe November.
Oh my goodness. Yeah. That is a long time, but you guys have had some really rough weather out there.
Yeah, we have. Yeah, we've got some rough weather, and to be honest, during the wintertime, we do the show here until 1:30 Eastern, and it was getting dark at 4:30. So,
yes,
no way you can really get out and play. But it's starting to get later, or dark later, and so I'm going to get out and play a little bit. But anyhow, yeah, there's a lot. I'm going to say bullish next week.
Okay, so I will turn in a bull vote for you and a bear vote for me. I do actually turn these in to Wall Street Sentiment Survey. I haven't looked at that in a while. I'll have to look at that on Monday so you can see what everybody else is thinking as far as what's going to happen in the market. It's a group of market timers, and we basically give our opinion as to which way we think it's going, and he tallies up the responses, and there you go. We have another sentiment indicator. So,
yeah, one thing that has happened these last few days is we've seen the market selling off in the afternoon.
Yes.
And so, right now it's still hanging. I think the Dow's probably still within about 30, 40 points of its high from earlier. I'd like to see a strong finish. If we get a strong finish in the VIX dropping, I think next week could be a good one. We'll see.
Yeah. Well, apparently it's going to be a great week as far as our show. We have everything stock charts up on Tuesday for some interesting tips or tricks. Mark Chaikin is going to be here, the creator of the Chaikin Money Flow Indicator, on Wednesday, followed by Bruce Frazier, the Wyckofian expert, and he'll be talking more Wyckoff. I know everybody just really enjoys that.
Yeah, I'm going to be really interested to see how Bruce approaches the selling that we saw. I mean, I always like to hear what everyone's approach is when you go through a period like this, because it's easy when the market's going up every day, to be bullish. But, how does Wyckoff approach a huge spike in volatility and the big volume selling that took place Anyway, that'll be interesting. Of course, having Mark Chaikin on, so that definitely is going to be a great
Yes.
show. I saw him interviewed by Jim Cramer not that long ago, and I thought it was a really interesting piece, and I really look forward to having him on the show with us next week.
Yeah, maybe he'll mention us.
Hey,
next time he goes on.
yeah, could be, no doubt about it. Could be.
Nice.
But anyway, that is it. It's a wrap for another week. I want to thank everybody for stopping by. Please, lower right-hand part of your screen, there's a How Do We Do section. You can just click on that link. We really like to get your feedback on what you think of the show. So please complete that survey as you exit. As a very quick reminder, Market Watchers Live airs 5 days a week, Mondays through Fridays from noon to 1:30 p.m. Eastern Standard Time. Have a great Friday afternoon, everybody. Enjoy your weekend. Be safe, and we'll see you back here on Monday. Happy trading.